You guys, I'll just kickstart the panel discussion, and then we will leave most of the questions to members of the floor because they are getting in there now. And we'll start with, so since Mr. Juma, you're from Tanzania, let's start with our guest from Zambia, right? So we'll start with Madam Chilekwa Banda from ADFP. So we have heard of financial literacy and digital education. And it's starting to be incorporated in some of the lectures, some of the information that we're provided with in schools and other education institutions, slowly, but especially at the higher learning institutions, not in the lower learning institutions. Can you tell us the importance of this financial literacy and digital education in this new world of information? Generally, how important is financial literacy and digital education? Welcome.
Okay. Good morning, everyone. Good afternoon? Oh, afternoon. The aircon is deceiving. Good afternoon, everyone. My name is Chilekwa Banda, Miss. So my name is unisex. I would assume that everyone was expecting a man, but just to elaborate, I am female. I've never been a man. So for me, when it comes to financial inclusion, and thank you for that question because it speaks into what I believe in and who I am as a person. My passion for technology and fintech stems from just looking at machines and the operating system, but it's about the people, right? So to understand, and this is something I have even on my LinkedIn profile. If you go to my profile, the first thing you're going to see is my tagline, which is to understand the power of financial Hello? To understand the power of financial inclusion, one must walk a mile in the shoes of those financially excluded. So to answer your question, are we doing the right thing in terms of financial literacy? I'd like to take all of you back, the audience, to your first financial literacy education, right? If you look at all of us in this room, we have smartphones. We have a forum to actually understand digital education. This summit is exactly what we want, right? But I want you to walk a mile in the shoes of that young boy in the village whose only power of education is being given a coin, right, to go and buy a sweet down the road from his home. He knows that maybe the sweet is 50 cents and he's been given a $1 coin. So he has been trained to understand the power of money. But that is the only form of financial literacy he has. The coin that has been handed to him in his hand. And it has no digitization involved. But then we in the urban areas have introduced a mobile money booth, right? So that is the only form of digital education he's going to understand. That at some point, when he interacts with a mobile money user, they will do something on their mobile phone, whether it's USSD or an app, and then they will give him change. His change is going to come in the form of cash. Where's the digital education here? We now have a platform. We have our internet. We have AI. The previous speaker was speaking into artificial intelligence. I can't imagine taking the word artificial intelligence to the village, right? It's already confusing enough with our jargon nowadays where we're speaking of technology, financial inclusion, financial literacy, now digital education. So AI will now enable you to quickly, you're about to present your speech and you forgot your notes. You either had a book or it's written somewhere on your notepad. You're simply going to go to your phone and quickly go to one of the chatbots or AI websites and you type, please create a quick speech for me about financial education. I'm sure I'm not the only one who's ever done that before. That is the power of digital education. We no longer have to call somebody to say, what was that speech about? Can you tell me what the previous speaker was talking about? You will find that information online. But now we need to take a walk into the shoes of those that are less financially included? How do we ensure that our products and services are reaching the last mile user? And that is what our association is about. We are the bridge between the private and public sector. We ensure that there's stakeholder engagement that is happening with the payment service providers, but we also ensure that the education is reaching the last mile user, because at the end of the day, all of us in this room are targeting one consumer. Thank you.
Right, that was very, very insightful indeed, and we're thankful for remembering everybody else and for being frank enough to tell us that, you know, everybody does that. Most of the people do that here with AI technology, with ChatGPT and whatnot, but they are very, very scared of sometimes admitting that we do that. But moving on to Mr. Juma Kimori, please. The digital banking information and the digital banking awareness in Tanzania is not very, very high, we like to think. But you're from NMB, and I think this is among the oldest banks in Tanzania. So I believe you have the information about the awareness. How is the current awareness? How can we term the awareness of digital banking and financial literacy in Tanzania?
Thank you very much, the moderator. Good afternoon, colleagues. Now, I'm delighted to be part of this panel, and specifically the discussion on the financial literacy and digital education. And before even jumping into the financial literacy and digital education, maybe just to provide context around some of the statistics that we have seen as far as Tanzania environment is concerned with respect to financial inclusion. And one cannot be talking about financial inclusion without focusing and enhancing financial education so that to get more people brought into the financial services, which are pretty much of the current and modern technology. Now, according to the studies now, Tanzania financial inclusion level has reached around 76%. This is from 65% in 2017. It's a bit of improvement, but you can clearly understand that we still have 24% of the population who are financially excluded. Now, when we are talking about digital financial services, it is also very important to note that the statistics from the FinScope indicate that around 82%, if you look at the payment, still cash is the dominant. Around 82% of payments are happening through cash. And you are among the witnesses. You know, most of us, in most cases, even when you go to somewhere, you would want to have paper money in your pocket somewhere, isn't it? So cash continues to be dominant in this economy, and so the only 8% is going through the digital platform. Now, so if you look at that, clearly it is an indication that we still need to do a lot as far as financial literacy and digital education is concerned. And of course, some of the studies indicate that in Tanzania, we are at around 40% financial literacy levels. This is still on the lower side when you compare with other developed countries. So clearly there is much to do as far as financial literacy is concerned. Now, we have seen quite a number of players in the market, financial services, so that is banking, MNOs, insurance, investing a lot in technology to just ensure that the financial services are accessible conveniently to the consumers. But I think the level of education in terms of bringing that awareness, in terms of the importance of using the digital financial services is what needs collaborations among the stakeholders. So fintech, regulators, the financial institutions, that collaboration is very critical to drive, because we all know the importance of having a formalized and digital transactions to the economy and to the society at large. So from where I sit, I think we see the progress in country in terms of the level of adoption of digital financial services, but yet we still have a long way to go to bring everyone on the board. And that requires education so that people can appreciate that carrying cash, paper money, is no longer something that they should go for because of security issues, but also in terms of, even from the benefit in terms of having financial records for borrowings. If you want to go borrow from the bank, we will actually want to see the level of transaction that you have been making. And if you're a business person, you have not adopted technology, then it becomes quite a challenging moment for you to be able to substantiate the level of transaction you have for the business. What we see in the banking sector, the investment we have made, for example, if I talk about NMB Bank, where we have invested significantly on the technologies. So if you talk about mobile money, USSD, and application, mobile app, but also internet banking, we have seen the uptake. So currently, where we sit, we have around 95% of transactions taking place outside the branches. It's a good progress we are making, but still we need that much to be more. Because we know there's quite a lot, as I said earlier, 82% of transaction payments are taking place via cash. If you go to villages, people still use a lot of cash. So this level, the education is critical for us to drive the awareness, and through collaboration, I think fintech have a very big role to play, but key players like regulators and financial institutions have a very vital role to play. From where we sit as a bank, we also do our best to educate people through our branch, through our social media, in terms of the digital products that we have as a bank. Given our size, to be honest, having 231 branches with a customer account around 6 million, then I think we are making good progress in terms of bringing people into the digital financial services. But there is a lot that collaboratively we can achieve further. Thank you.
Thank you very much, Mr. Juma, and especially with the previous introduction by Madam Chilekwa there, by Ms. Chilekwa. We need to make sure this literacy hits the 80-something% that you talked about. And that is when we can really say in Tanzania, majority of people, or in East Africa, and so on and so forth, have this literacy and digital education. Now I would like to move to the members of the floor, and we would like to have questions on financial literacy and digital education. This is a very sensitive topic also because we are here to be educated as well. We're not just representatives, we are here to get educated. So we have the first question here. Can we have the logistics guys, please? The logistics people. Yes, so we have first question here. Can we have the hands up again, please? 1, 2. Another question? 3. All right, so we'll start with these 3 questions, and then after that, we'll move straight to the following questions if we still have time. And after the answers to those questions, we will head for lunch. Welcome, sir.
Hello, my name is Praveen. I appreciate, I got a lot of knowledge from the speakers. So, I'm from India, and we give a lot of solutions to the banking and financial institutions. So one thing that I wish to, I learned from, connecting with bankers, from Africa, and also the people who, how to get the service from the banks. What complaining is about the cost of operations. For example, the interest rates in African countries are really high. So I have seen some really fantastic technologies implemented in African countries, but the purpose of the banking is to really serve people. You know, if somebody takes a loan, they must feel that, okay, bank is helping. But when it comes to the interest rate, it seems to be, I was not able to digest about the, some of the interest rate which I heard. So because I really believe the development of a nation really, it's one of the parameters, the low interest rate, so which can help the business to run. So how can, you know, what is the initiative, maybe the Tanzanian banks or, and I don't know, and how much concern are the bankers here to offer a better service by offering, you know, better interest rates? Thank you.
Thank you, sir. The second question, I believe that question was directed to Mr. Juma here from NBC, from NMB? Or anyone can answer. Okay, because he's from NMB and he's from a bank, I think that will be proper for him to answer. But Madam, if you have some addition, you will perhaps add. Second question.
Thank you so much. Juma and Madam from Zambia. I'm from the education sector. I've been training students for the last 14 years. And one of the challenges I find as someone who trains students, especially in business education, is that the participants in the industry who are in the banking sector, who are in the financial services sector, generally are interested in coming to the university either to pick employees or to sell their products. They are not interested in participating in creating this financial literacy that you're talking about. Now, because of that, you find that there is a gap. You are trying to sell these products to people who don't understand these products. And you're not making an effort to make them understand. Number two, because you focus more on profit maximization and cost minimization, you're always looking at how to make more money from the market, and you ignore how to enable the market and to facilitate the market for you to make that money. So I have a specific request to you, Juma, and your colleagues, that instead of having 231 branches, which are physical, brick and mortar, we are in the digital era. Why do you need 231 branches? And you're spending rent, you're spending a lot of money in maintaining those 231 branches. Why don't you have 50 branches and you have 1,000 or 10,000 digital branches or 1 million digital accounts? And you spend or you channel the other money that you would have spent in maintaining those 231 branches in creating this awareness. Go to these universities, talk to these students, give them this knowledge. Go to the villages, talk to these village circles, talk to these women in the villages. Teach them about saving, teach them about investment, teach them about how to use some of these digital platforms. And in that way, you're going to be creating more customers for yourself, you're going to be creating more money in the economy, but you're also going to be creating a citizenry that is, competent, that is informed, that is aware. And that's my contribution. Thank you so much.
Thank you very much. I believe if there's an addition to that, Mr. Juma here will provide it as well. Third, from Madam.
Thank you. I will not introduce myself once more, but I have a question which is extension actually of the first question about APRs. As our keyword today is a fintech, now my question is about specifically digital lenders like Tala, Zenka, Branch, Fair Money, Nigeria, etc., etc. So those guys are targeting low-income people. They're giving small loans like 100 USD, 20 USD. with a pretty high interest rate, like from 10 to 50% per month, right? So, but they don't have any other choice because they're targeting low-income people. So, meaning this is high-risk people, as they don't have credit history, they don't have digital identity, many of them, actually. So that's why this is explanation why their interest rates are so high. So my question is, do you think this is ethical business to do that? Or if you think that it's not ethical, then how else to serve these people who do not have anything? They might have some income in cash, which is not visible to anyone. They might have just button phone and do not have Facebook, etc., etc. Thank you.
You? I think you got the question as well. So first, can we answer those questions first before we proceed with other questions if we still have time?
Okay, thank you very much. If I may start. Now, just to also appreciate the questions that have been raised by delegates. And to start with, I think there is a question on the interest rate, high interest rate. And of course, it is important also to appreciate that for a bank to come up with the interest rate to charge a customer, there is a lot of things that are being considered. One of them being cost of funding. And this is where, because I think the bank is relying on funding either from the shareholders or from the depositors or from the DFI who are able to lend to the bank for them to also lend further to the customers, the consumers. Now, at the same point, the banks also need to sustain their growth. They need to also make money. They need to optimize. So all that put together, one would say that interest rate becomes higher. But I think just to give a statistics, currently the average lending rate, according to the Bank of Tanzania stats, is around 15, average 15.8 thereabout. I tell you, if you look at what the banks have been doing specifically in the Tanzanian economy, we have moved a long way from the 28, 26% to now talking about, and I'm very much delighted to see we are talking about 15%, 15.8%. We have seen banks now offering single-digit interest rate to specific sectors like agriculture. Like for us, we set around 300 billion to agriculture at 9 to 10%. That is one of the best interest rates if you look at our currency and so on. So I think we are making good progress as an industry. When I started my first employment 16 years ago, my first loan was around 25%. Right? Now I can get it at that level of less than 20%. So we are making good progress. And this is because of the deliberate measures that key stakeholders in the market, including the regulator, but the key players in the market are undertaking. So I think we are making good progress. I hear you, in some cases still high, specifically where the risk is also very high, you will also be priced high. But as time goes, as you improve and you actually reduce your risk level, then the interest rates are also going to be on the lower side. The universities, I think spot on, and I take note of your recommendation in terms of using those avenues to provide more education. And of course, for a bank like ours, we have youth proposition program where we visit university, provide financial literacy to the students from different universities. And this is just to ensure, because for us, we look at these students, our potential customers, and we are doing exactly what you're proposing, and probably we will enhance that. In terms of So for example, last year, as we speak, last year we provided financial literacy to the villagers at around 17,000 individuals in the villages, 17,000. It's a tough one, tough call you spend to do that, but we know it's our responsibility as a key player in the market, and we will continue to do that, and thank you very much for that. Profit maximization, I think I've already covered. You talked about branches. Now, this is a balancing art, yeah? Because a bank with 231 branches, you will appreciate that the bank has also played vital role in bringing people who are at the remote area into the financial system. If you are talking about 231 branches across the country, then that tells you that we are doing our best. At the same time, balancing that to the digital platforms and investment in alternative services, of which I already say that we are now talking about 95 of transactions are happening through digital or other alternative channel. So putting a branch in Mtwara, imagine the situation without that branch there. It could have even been worse. The financial inclusion we are talking about could have even been below 50%. Lastly, I think the issue of micro-lending, where there is a view that interest rates or other charges are unfair. I completely agree with you. Even in country here, we have certain lenders pricing as 30% per month, thereabout. Now, I think it boils back to the financial literacy and education. Bring these people into the formal financial services so that the financial institutions can have their best history and to reduce that risk. And of course, it's also learning to the banks and so on in terms of how quickly and we make services accessible but also cheap. Because someone going to a microfinance borrowing at that expensive could have gone to a bank and get a lower interest rate. So I think that education we have been talking about and literacy, where are the alternatives, cheap sources, and what is it that you as a customer need to do to have a low risk so that you can be priced accordingly. I think that's something that we will continue to do. And we see good traction so far. Thank you.
All right, Madam Chilekwa, if you have anything to add on that, or maybe an insight to the banks that they can add up before we close?
Yeah, very good questions. I think what I would do is add onto what my colleague has mentioned already. But for me, I think the key word here is collaboration, which was mentioned in the opening. When you look at the first comment from one of our participants there was about picking employees and selling products that are no interest in financial literacy, but the gap is really in educating the consumer about the products and services we're providing, but we're not doing a very good job in the education space, right? Collaboration here is how are the banks, the fintechs, and the financial educators collaborating to send that message? We're speaking one message to these institutions. It's simply looking at it in terms of when you look at a university, a college, or the education sector in general, are we deliberately making efforts to approach, let's say, the Ministry of Education and changing our syllabus? Because technology is evolving, but our school curriculum is still the same. We're still learning about grasshoppers and zinjanthropus, and how has this helped us in the financial and digital space, right? I'll give you an example in Zambia. We have actually had ICT policy reviewed from 2006. It was only reviewed last month. So you can imagine the regulator has done a good job there because it was in collaboration with the ICT Association of Zambia. We had the private sector involved. We had banks involved. We had associations involved. And we're to one of the panel discussions that I'm moderating tomorrow. This one is painful because I've also experienced this. You go to a bank, and you know, once you leave the corporate space and you become an entrepreneur, unfortunately, the banks don't like you anymore. They want to know that you have a business that's been running for 6 months. They want to know that your annual turnover is 1 million and above. They want to know that you have a credit score. But how do I prove all those things if all I have is my mobile money wallet and a little kiosk or a little retail store that has been selling groceries for the last 2 months, right? So then I decide to visit a loan shark or your illegal lenders, or whatever it is that you call them, right? The fact is they're now competing with the banks. So if a bank is giving me interest at 10%, because they know they will not really bother about my KYC, they'll give me at 15%. And in that situation, I'm desperate. And what are they asking for? Collateral. When you look at lending, it's also a gender issue. And I'll speak into gender here because most of the statistics show us that women are good at saving. Why? Because even in the household, the woman is going to get money from the husband, and the first thing she'll think of is, I need to buy food first, or I need to buy him a shirt, or there's school fees. She'll budget for that money that was only meant for, let's say, her hair. But for a man, he will get money. If it's groceries, he's just going to the supermarket to buy groceries, and he's coming back home with those groceries. Am I wrong? I'm correct, right? When it comes to borrowing, guess what the banks do? The banks will ask for collateral. Collateral is usually a house, so property, or a vehicle. Whose names are on those documents? A man. So what are women doing? Village banking groups. So there's more money going to the village banking groups, but then you're borrowing from your village banking groups with the high interest rates. But what are we doing? We're still eating into that last mile user that needs to be financially included and educated so that this also trickles down into our economy, right? So how do we solve these problems? We in this room, we're the ones who are going to solve those problems through interoperability, collaboration, partnerships. The fintechs understand what is going on in the ground. The government understands the policies that need to be put out there. There are rules that will govern how all these payment service providers work and how they charge, etc., etc. Once a regulator says the fee for mobile money is X amount, we all sit back and it trickles down across. Best example is the government of, was it Rwanda? And I think Kenya is coming up. Recently announced that you no longer need a visa in Africa.
Yeah,
Guess what
right.
that has done?
Yeah.
All the other African countries
Yes.
want to do it. So it starts from there and then trickles down.
All right, thank you very much, Madam. And I would like to take this opportunity to thank both our speakers and the people who asked questions. Can we have a round of applause to Mr. Juma Kimori and Madam Chilekwa Banda, please, for very thorough information. Thank you very much. I would like to let you go now. Thank you very much. I believe we're still here for a few minutes and we'll be there at lunch and we will receive a lot more questions from the members of the floor. Another round of applause.